tell us about the pandemic resultant opportunities. I know you've spoken about the need among small and mid-sized businesses, but also I'm wondering if you're seeing dislocations and distortions in the market, both in terms of supply, demand, and being able to look at a company's fundamentals because of excess liquidity.
Sure, and thanks so much for having me. Yeah, it's an interesting backdrop that we're observing. I mean, I think most importantly, we've seen that, the central banks have just provided so much liquidity to the system, obviously, and lowered rates globally, which does provide a good backdrop and provides runway for businesses. I think a lot of that has accrued to the larger businesses that can access the capital markets. We've obviously seen a huge rebound in the high yield market, which is now back to trading to pre-pandemic levels, as well as the equity markets. But I think when we observe middle market companies, which is really the focus of Ares, most of our portfolio companies have somewhere between 50 million of EBITDA and 250 million of EBITDA. We see less access to those markets. And as a result, I think we see kind of a slower, more sluggish economic recovery for these middle market businesses. And that does provide opportunity for us.
We've seen in one of the ways that the pandemic has changed shadow credit in these jumbo loans, right? I know that Ares is part of that club of these $1 billion plus loans that are being extended. Is that a trend that's likely to continue? Will you continue to participate in that? Are there sort of concerns about risks given that we're half a year into the pandemic now?
I mean, from the early days, we've been most concerned about risk management. We saw, very limited deal flow, really from the March probably into July timeframe, right? It really was slow. M&A market very slow. And, it's just coming back in September here, leading with the large corporates. In terms of the private deals, I think what I'd say is before the pandemic came along, we were seeing a pretty significant transition in billion and under type transactions to the private markets away from the public markets. And I think the current situation will accelerate that. We've been a participant both in the US and European markets, have done a handful of deals, at $1 billion or well north of that. And I think it's a great opportunity that should continue. Uncertainty, volatility, and all of that in public markets tend to lead companies that we deal with to look for more certain situations, more certain transactions with partners that they know that have long experience in the market, as Ares does in our credit business, in our private equity business, and in our real estate business.
But how does Ares get the certainty yourself that you're actually making a good bet on one name when you're betting so much and you have really little visibility of the next 6 months, the next month, even the next week?
You're making a good point. We're certainly living in a very unpredictable world at this point. I mean, I would emphasize that the transactions that we're focusing on, certainly of that size, are generally in businesses that I would characterize as not really having impact from COVID at all, right? It's been similar to what we've seen in the M&A market as well, where industries like healthcare and technology in particular have really been leading, the rebound in M&A volume. Probably also true for some of the bigger deals, that we've been doing here over the last 6 months.
What about stressed credit portfolios? Are you snapping those up as well from other struggling competitors, perhaps?
I think it's early for that. At the end of Q1, I would have predicted that probably would be something that would be, a significant activity for us today. And it's extended a bit because I think the retracement in the public markets has allowed for private market valuations to actually increase as well. And that's created fewer forced sellers, fewer financing problems for folks. But I also do think that in the private credit space in particular, the owners of these assets, people like Ares and obviously many of our competitor and firms that look like Ares, have set their businesses up so they have better capital, more patient capital to have invested in this market. And I think we and our competitors are materially less leveraged in all of these strategies than we were during perhaps the global financial crisis, where more forced selling came as a result of that than we're seeing today.
Kipp, what do you see as the biggest uncertainty for, say, the next 6 months of this pandemic and the recovery period?
That's a tough question. I mean, I think, as we say internally, our crystal ball, frankly, isn't any clearer than anybody else's at this point. I think since the beginning, we've just really been talking about the duration of this global health crisis that we're all enduring, right? So the hopeful side of us says that we're into some reopenings globally. Businesses have reopened. Operations are better, certainly than they were in March and April. But I think it's the same question that, you're all addressing with others and that we're addressing internally as well, meaning when will there be quality therapeutics? And I think we've come a long way on that vis-a-vis COVID-19. And certainly everybody's, looking at when a vaccine will be available, when it can be widely distributed, that's safe, et cetera, et cetera. But the real key is obviously getting us to a global health situation where people can go back to operating, and the companies, of course, that we're invested in can go back to operating the way that they did in, February of 2020, or perhaps January of 2020.